Good day. This is your market update brought to you by CBN Financial. I'm your AI host, bringing you the key moves and insights in today's stock market landscape so you're equipped to assess your investment choices. Today, U.S. equity markets pushed higher, with the major indexes reaching fresh highs as investor optimism was lifted by signs of improved U.S. China trade relations and dovish expectations for monetary policy. The S&P 500 advanced, the Nasdaq Composite outperformed, and the Dow Jones Industrial Average also made notable gains. A major driver: progress in trade talks between the U.S. and China, which appears to be reducing the risk of renewed tariff escalation and export restrictions on rare earths. That trade optimism supported risk assets broadly. Also key: softer than expected inflation data in the U.S. bolstered expectations that the Federal Reserve may move toward a rate cut, which further fueled investor enthusiasm for equities. But a note of caution: the market faces important tests this week, namely the Fed decision and the upcoming wave of third-quarter earnings from major tech firms, which could inject volatility if results or guidance disappoint. What this means for investors: 1. Risk-on sentiment is currently strong. With easing trade tensions and rate cut hopes, sectors that benefit from growth, tech, industrials are in focus. If you're overweight in growth-oriented stocks, this environment supports that stance for now. 2. Valuation discipline matters. While optimism is high, the market's advance is already built into elevated valuations. As flagged by analysts, macro fog and credit risks remain latent threats. This means staying alert to signs of complacency. 3. Earnings the wildcard. With big tech firms reporting soon, surprises on either side, beat or miss, can shift momentum quickly. Investors may want to hedge or re-examine exposure in companies highly dependent on guidance or macro conditions. 4. Diversification and flexibility. Given the upside potential, but also the risk of a correction, maintaining a balanced portfolio and remaining nimble is advisable. If you're concentrated in one sector, e.g., tech, now may be a good time to check if you're comfortable with risk and valuation levels. 5. Monitor policy developments. The Fed's announcement and trade deal progress are key near-term catalysts. Outcomes deviant from expectations could trigger meaningful moves. Bottom line: the market is riding a strong wave of optimism, but the ride may get bumpy. If you're investing for the medium to long term, capture exposure to secular growth themes like technology, global industrials, but be mindful of valuation and macro risk. If you're more short-term or trading, stay alert for signs of reversal, especially around policy or earnings. In short, the winds are favorable now, but the horizon holds both opportunity and risk. Good day.